Nvidia just hit a $4 trillion market cap, and now it's cleared to sell AI chips once again to China. Some analysts say that 6 trillion or even 10 trillion is next. But here's the thing, the stock is up 90% since April, which means this could be the breakout of the decade or the moment everyone gets dumped on. My name is Rick Orford. I've been trading since 1999, and I'm not a financial advisor, which means I'm not here to sell you a mutual fund. I am here to tell you what the headlines won't. Nvidia's profit margin is a mind-blowing 55%. Its new Blackwell chip, well, it's the fastest out there, built to run AI models with 10 trillion parameters. And its comeback in China could unlock billions in revenue. But with competition heating up and valuations stretched, this stock is either about to explode or stall out hard. Nvidia is the global leader in accelerating computing and AI hardware. It's best known for its GPUs, or graphic processing units, which dominate 88% of the market for discrete graphic cards in personal computers. The company's products are also used in data centers, autonomous vehicles, and robotics. Nvidia's new generation chips, such as the H100, H200, and Blackwell series, are the backbone of generative AI models used by some of the biggest companies, including OpenAI, Meta, Google, and Amazon. And because of all this excitement, Nvidia has become the first company to reach a $4 trillion market cap, and now it's received the green light to sell AI chips to China once again. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. Some analysts expect this could catapult it to a $6 trillion valuation. But with the shares up 90% since April, I wonder, will the stock increase further, or is there a looming profit-taking waiting to happen? Oh, and if you want to follow along with the charts, feel free to scan this QR code. So let's first take a look at the ratings. Nvidia has a consensus strong buy rating among 45 analysts that's been rather stable over the last 3 months. There's a high target price of $250 on the stock, suggesting as much as 50% upside in the stock over the next year. So it's no surprise that everyone is talking about Nvidia, and there's lots of good reasons for it. First, this is the first company to reach a $4 trillion valuation, and it highlights its success in the tech industry. Aside from that, the stock has increased to a high of $174.25. It's an all-time high, jumping over 90% in just 3 months. But why? Well, it was because of the US government's restrictions on Nvidia's H20 AI chips to China, or the export of it. Earlier in the year, the company missed out on billions of dollars of sales due to the license removal, a value that can be regained or maybe even exceeded once Nvidia re-enters the Chinese market. Now, I should note that Nvidia's sales in China is not expected to be reflected until its third quarterly financials. And with that, let's see how Nvidia has performed so far. Nvidia's most recent financials are incredibly impressive, with sales reaching $44 billion, up 69% from the same quarter last year. The company's net income also rose 26% to $18.8 billion, and its earnings per share also came in at 77 cents, which is 17 cents higher year over year. Now, for those not familiar with earnings per share, or EPS, it's a measure of the company's profitability divided by the number of outstanding shares. Basically, it tells you how much profit the company generated for each share or stock. It doesn't matter how much revenue the company makes. The more EPS a company makes, the more profitable it is. A 17-cent increase may look minimal, but it means that Nvidia generated significantly more profit per share compared to the same period last year. And this signals stronger financial health, which justifies its current high stock price. The company pays a forward annual dividend of 4 cents a share, which translates to a yield of about 0.02%. So you're not really buying Nvidia for the dividend, but given the fact that they do have a dividend policy, it does mean that there's a door open for more meaningful payouts in the future. Nvidia's first quarter results may be hard to beat, but the question is, can Nvidia continue this momentum and continue to deliver even stronger performance in the quarters ahead? Well, maybe. Let's see how that could happen. Nvidia's product lines continue to dominate the market, and the company looks well positioned for further growth. Let's have a closer look. First, Nvidia is poised to make that comeback in the Chinese market. This is very important. After a 3-month pause due to export restrictions, Nvidia can now resume sales of its H20 artificial intelligence chip to China. Nvidia's email announcement to investors says that Nvidia is filing applications to sell the Nvidia H20 GPU, or graphics processing unit, once again. And the US government has assured Nvidia that licenses will be granted and that Nvidia hopes to start deliveries soon. And this will lead to speculations of sales increases for the company's fiscal third quarter. Second, Nvidia's Blackwell platform is set to power a new era of computing. The Blackwell is Nvidia's most powerful chip yet, designed to handle AI models with up to 10 trillion parameters. Blackwell brings a major upgrade, including faster communication between graphics processing units, better efficiency, reliability tools, and strong data security. Blackwell is not just fast, it's smarter, more secure, and built to scale. Third, Nvidia underscores the rise of humanoid robots with its new cloud-to-robot Isaac platform. With Isaac, developers can significantly boost training robots using synthetic motion data, removing months of manual work. Major robotics companies such as Boston Dynamics, Foxconn, and XPeng are already using these tools, solidifying Nvidia's role as the AI brain behind the next wave of physical machines. Not sure how this might play out? Well, think about it this way, right? Think of your smartphone. If you've been using an iPhone for years, switching to Android might seem cheaper or even better on paper. But most people will never switch. And why is that? And that's because already everything's set up. Your photos, your apps, your passwords, your messages. Everything just works. And that's how Nvidia works for developers and companies building AI. Once they start using Nvidia's tools, it's already familiar, reliable, and almost impossible to replace. Even if someone else offers a faster or cheaper chip, it's a hassle to switch. And that stickiness is why Nvidia continues to dominate while competitors only try to catch up. But as strong as it seems, Nvidia's momentum can come to an end in a snap. If you're an investor or someone planning to invest, be aware of Nvidia's tightening competition. Huawei and AMD are both aggressively investing in their own AI chips, which may affect Nvidia's sales by taking some of its market share. Nvidia losing its export license alone does not mean that the demand for AI chips in China is going to take a break. No, losing a major supplier creates opportunities for the competitors to step up, which is exactly what Huawei did. And even though Nvidia is set to make a comeback, its sales may not meet expectations due to the rise in intense competition. Aside from that, Nvidia's spending on data center chips and components is growing exponentially. This fact is not gaining significant traction because the company's sales exceed its spending. Also, its technology is at the forefront of the industry, so somehow, right now, it's justifiable. However, this data center spending cannot continue forever. If Nvidia's AI chip does not hit the mark, that return on investment could fall short, exposing the company to revenue risk. With that in mind, let's compare Nvidia to its peers with the highest market cap in the Magnificent Seven. Nvidia's price-to-earnings ratio suggests that its stock is trading at a premium. The PE ratio measures how much investors are willing to pay for each dollar of a company's earning. A higher PE often reflects higher growth expectations. Meanwhile, profit margin is a tool that measures efficiency, showing how much profit a company keeps from every dollar of revenue. Nvidia leads with a profit margin of 55.85%. And this means Nvidia keeps more than half of its revenue as profit, and that highlights its dominance and high-value products. Nvidia, when compared to its industry peers, also appears to trade at a premium. Its price-to-earning ratio is lower than AMD and Broadcom, but the company is far superior in profitability with a 55.85% profit margin. So I would say it's likely fairly valued based on its market dominance. I think it's fair to say that the primary goal of any investment is to generate a profit. But how we get there depends on our risk appetite. Some investors chase high yields, while others higher risk, while others prefer steady, long-term growers, even if the gains are modest. Personally, I like to play both sides. Nvidia may not offer a high yield, but breaking an 11-year streak of flat dividends is a strong signal of confidence and potential. To me, that makes it worth watching and worth investing in. Investors who believe in Nvidia's long-term tech leadership and have the patience to ride out short-term volatility may find some real value here. Just look at Apple. Its dividend stayed flat for years, and the stock was relatively quiet. But once momentum kicked in, it became one of the most valuable companies in the world, and Nvidia could be on a similar path. Personally, I think Nvidia stock has a long way to go, but only if exports to China hold and Blackwell adoption goes well. The risk-reward is tighter now, but the upside could still surprise us. So are you buying into Nvidia's vision in the second half of 2025? Let me know in the comments below. And of course, if you found this video helpful, don't forget to like and subscribe so others will find it as well. Thank you so much for watching, and I'll see you next time.